Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, regional governments are starting to organise some pushback against China's Belt and Road Initiative. Firstly, however, there is a range of data out in the US pointing to varying outcomes. Housing starts dropped sharply in February and were 4% lower than the same month a year ago. That is a drop of 50,000 new houses worth some $12.5 billion, and it's not insignificant. But overall, industrial production was up 4.4% in February from a year ago and well above analysts' expectations of a 0.3% gain. That gain brought quite a strong rise in capacity utilisation, and its highest since January 2015. And consumer confidence is rising, with one survey at its highest level since 2004 and a new record high. Driving this is the immediate expectation of conditions, but consumers are wary of long-term consequences of current policies, and that part of the index is dropping. The latest data shows that China is slowly reducing its holdings of US Treasury debt. In China, a good proxy for real activity is their rail volume activity, which increased 8.2% in February from the same month in 2017, although that was down from 9.4% gain year on year in January. More than 100 countries have agreed to try and get an international consensus on how to tax digital businesses across borders as part of the BEPS initiatives, all in the next 2 years. Trying is one thing, but getting agreement may be tough. However, the EU is proposing a 3% tax on their revenues and may do that on their own. In Russia, their central bank is shoring up 2 financial institutions hit by international sanctions over Crimea violations. That will cost the Russians up to 3.8% of their GDP to protect these 2 banks. In Australia, the Reserve Bank has warned investors that a shift higher in global interest rates could impact other asset classes as major governments shift from net buyers to net sellers of bonds. And staying in Australia, they are joining with ASEAN to push back against China's dominance of infrastructure funding and the influence across the region. The plan is to design new regional development projects free of China's influence and debt traps, partly to fund them with private sector and regional institutions like the Asia Development Bank, and keep them competitive with subsidies and national aid budgets. In New York, the US Treasury 10-year yield will start the week a little higher at 2.85%. The gold price has slipped again, down another 4%, and now at $1,314 an ounce. And oil prices are up marginally today, with the US benchmark just over $62 a barrel, while the Brent benchmark is just on $66 a barrel. The Kiwi dollar will start today a half a cent lower at 72.2 US cents. On the cross rates are unchanged at 93.6 Aussie cents and 58.7 Euro cents. That puts the TWI at 73.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.